Gold has crossed 3-month high and spot gold crossed $4,700 an ounce on Monday, its highest level since May 15. It also gained over 5% last week and is now up more than 15% this month. So what's driving the move? Let's go back a little. Gold has had a huge ride this year. It reached around $5,595 an ounce in January. Then came a major sell-off with gold falling below $4,000 in June. By August, it had recovered to around $4,400 and now it's back above $4,600. So what's changed? There are few things coming together. First, the dollar is weakening.
One factor is the US Treasury's surprise increase in buybacks of long-term government debt. Now, this is not QE or a major liquidity injection, but it has raised questions about the Treasury market, the fiscal pressures, and importantly, confidence in the dollar. And we know whenever uncertainty rises, investors typically look for safe haven assets, and gold is usually one of the biggest beneficiaries. Now, the next big trigger would be the US inflation data, particularly the July personal consumption expenditures price index data, which is the Fed's preferred inflation gauge, along with Kevin Warsh's speech at Jackson Hole later this week. These would provide fresh indication and clues on Fed's rate path, and that will also be very important for gold's path going forward.
Then there is geopolitics. Trump's latest economic D-Day against Iran has added another layer of uncertainty with tougher sanctions and pressure on Iran's trading partners. But here's the interesting part. Gold's reaction has been relatively muted. That's because the rally isn't simply a bet on another Middle East escalation. When the Iran war started, gold actually fell. That's because the first reaction was a rush for cash. Investors sold assets to raise liquidity. Then oil prices jumped, increasing inflation fears, and that made investors worry that US interest rates could stay high for longer. So the usual safe haven trade didn't work, but then the picture changed. Central banks started buying again. China added 20 tons of gold in July, taking its reserves to 2,366 tons, its 21st consecutive month of increasing reserves. Central banks overall bought around 289 tons in the second quarter, and investors returned to gold's ETF saw around $3 billion in net inflows in July after 2 months of outflows. Their combined holdings moved above 4,000 tons. Analysts have also noticed gold breaking through several important technical resistance levels. HSBC analysts said the strength of the move could point to increased buying from central banks or sovereign wealth funds, but there's still no confirmed data on exactly who the major buyers are, and that's what makes the current rally interesting. Gold's safe haven role hasn't disappeared, but the Iran war showed us that gold doesn't simply rise every time there's a crisis. Sometimes investors sell it because they need cash. Sometimes a crisis pushes oil and inflation higher, which means higher interest rate, and that's bad for gold. But once the immediate panic fades, investors start looking at the bigger picture. The dollar, government debt, inflation, interest rates, and the value of currencies. And that's where gold is finding support now. So this isn't just a story about war. It's a story about confidence in the financial system. And right now, the story is helping push gold to a 3-month high.